when we're answering the question, we need to make sure that our answer is balanced. So it means that we cannot talk only about one part of the mission. So it's better to plan first and think which metrics can relate to what part of the mission. Well, okay, what is operating profit margin? Well, operating profit margin can talk about efficiency, because it shows us how well we can keep costs. What is secured revenue? Secured revenue, I do not know what that is. Well, let me look at those notes that we have here. And what is secured revenue? Is a long-term recurring revenue. So this means that it's something about maintainability. Okay. Going to relate it here. Okay. What is management retention? Well, maybe it's about best talent. What about order book? What is order book? Let me see the notes. Is the total cash value of future contracted revenue, and there are like contracts that run up to 10 years in the future. Okay, so order book, maybe it's about maintainable revenue as well. Okay, organic revenue. What is organic revenue? Let us have a look. Organic revenue is gross is calculated by using the total revenue figure as reported in the accounts. So organic revenue is shown as a gross. So it looks like it's talks about gross, but it does not talk about maintainability or profitability of the gross. So I will put that separately, like here. What about return on capital employed? Well, return on capital employed, well, it's can relate to shareholders. So maybe it's about profitable course. So we can put it here. Also, maybe operating profit margin will be related to shareholders' profitable growth, but you see, we need to make our answer balanced. So there is no use to talk about many indicators. There is no use to put 2 indicators for this part of mission and leave no indicators for the last part of mission. And also, let us double check. Well, there is provide world-class services. Do we have anything about that? Well, no, we do not have. There is nothing that would indicate that there are some world-class services. Well, because there is no customer satisfaction, there are no metrics such as number of words worn, and so on. So what we are going to do, we are going to explain why this or that metric relates to mission or not. And when we are going to do that, we are going to work in 2 ways. If the metric relates to the mission, we will need to explain the mechanism. We will need to explain why we think that this metric relates. If this metric does not relate, or relates slightly, we would use the words such as only indirectly. Well, let me show you. Well, let's start with the first metric, which is here. I'm going to use this order so that it is logical. Okay. Hold on. I wanted to for that data to be put as values. Okay, so let's start with operating profit margin. Operating profit margin, and what can it tell us? It can talk about maximum efficiency. Can indirectly measure how efficient dashboard service is. And I need to explain why. Because if it is efficient, then its costs will be lower, and thus the margins will be higher. However, operating profit margin increase can also be connected with the growth in prices. So look, I say that it is indirectly because this is not a direct measure, and it's very important to use that word. And I need to explain why there is no direct connection, and I need to explain why there is some correct connection. So I explain because if costs are lower, then the margin is higher. So I explain how it measures just a little bit, but also I explain why it does not measure correctly because there is growth in prices. Okay, well, let's go to the secured revenue. Well, secured revenue, and let me see what it is. And it's not a very conventional metric. And we can copy paste that and place it here. Secured revenue is long-term recurring revenue. This is the percentage of budgeted revenue which is already contracted. We do not need that part or that of the definition that says that the budgeted are completed late, because this is what we are going to talk about when we are going to discuss assumptions and definitions. And we need to talk about the metric, just the metric. So if the metric was calculated and presented correctly, then would it measure any part of the mission or not? Okay, so this means I leave that explanation because this is not a conventional metric. And what does it mean? Well, it means that the value of this metric shows whether the company will be able to get the budgeted revenue in the next year. So it will show whether the growth is maintainable within the upcoming year. Okay, this is a percentage of budgeted revenue which is already contracted. As such, it will show whether the growth is maintainable within the current year. But it does not say anything about longer term aspect of maintainability. All right. Well, it would be more logical to put order book here now and talk about order book. And let us see. Well, order book is the total cash value of future contracted revenue. And that with services contracts which run up to 10 years into future. Well, we will not talk about discounting anything because, again, it is other aspect, other question. But here we will say, what does it mean? Well, it means that that order book actually measures whether the revenue is maintainable. So it means that it measures whether the company will be able to get how much revenue the company will be able to get, how much revenue the company is sure to get within the upcoming 10 years. And as such, shows maintainability of the revenue. Okay, so it seems that order book more or less measures that thing. All right, so what do we have next? We have management retention. And if managers stay within the company, then this means that their talent, their expertise is growing. So this means that dashboard services indeed develops the best talent. However, the best talent does not is not limited only with managers. So this metric does not tell us about other employees. So on one hand, if managers stay long in the company, their expertise grows, and as such, this metric would help to measure whether the company develops the best talent. However, it is not only managers whose talent dashboard services requires. Why? Well, let us see what the company does. It's some management services. Well, maybe there are some employees that would need to delight customers. All right. So, for example, to delight, well, maybe not, for example, maybe because however, it is not only managers whose talent is required, because it needs good employees to delight customers with the services. As such, this metric does not, or maybe is a poor approximation of the development of the best talent. And again, in here, you could have come up with some different metrics, and it's with some different explanations. Like, for example, you could say that management rotation, well, it's okay, but it says nothing about how many trainings they achieved and how knowledgeable they are. So maybe they just work a long time, for a long period of time, but they do not, they're not bright people. Okay, organic revenue. What can organic revenue measure? We talked about the fact that organic revenue does not really say whether the growth is maintainable, and it does not really say about whether it's profitable. So organic revenue. It seems that organic revenue does not really say whether the growth is maintainable, because it shows only past revenues and does not relate to the future. Well, and that's it. Okay, so we have return on capital employed. And with a return on capital employed, well, there is a special law over the examiner of advanced performance management and return on capital employed. So I'm going to show you the wording that I would suggest you to use at the exam, and that is likely to bring you 2 marks. Well, the thing is that return capital employed, it was one of the most commonly used metrics in the business world, and everybody would use it. But return on capital employed is when we take some operating profit and divide it by that plus equity. And this metric is pretty dysfunctional. Why? Because, well, let's say if we have a service company, then, well, capital employed is not very big. Well, like let's say we have an IT company. What do you have there? You have some laptops, you have some tables, and the value in this company is in people, is in the processes, is in the client's database and reputation. So it's not measured by assets. And therefore, it will not be very useful for services organization. And also, return on capital employed takes profits, and profits is an accounting measure, and this means that it is prone to accounting estimates. And also the thing is that even if we take manufacturing companies, return on capital employed is dysfunctional. Dysfunctional means that if managers will reach that target based on return on capital employed, it will not always be for the good of the company. Well, for example, if I want to get the set return on capital employed, then I will not buy new machinery. Because if I do buy new machinery, then the new machinery will be just more expensive. I will just have a huge amount in my capitals, in my non-current assets, and this means that my profit divided by the increased value of capital employed will be lower. So I will not do that because I just want my bonuses as a manager. And therefore, when we see a return on capital employed, we would say something like that. Well, being a listed company, this needs to ensure it increases shareholders' wealth. Also, its mission states that the growth should be profitable. However, and this is very important, return on capital employed is a poor approximation of shareholder wealth increase because it is prone to accounting estimates such as useful lives of the assets, of non-current assets, and leads to dysfunctional behavior because it demotivates to invest in well, and then we can list marketing, for example, and non-current assets. In marketing, let us say in, for example, marketing or non-current asset. Well, in this very case, we have a service organization, so I would only say marketing, because, well, what kind of non-current asset would you want for service organization? Well, not much. This is not a factory. If it was a factory, I would talk about the fact that it does not stimulate managers to invest in non-current assets. But as I told you, it's very important that you write it that way, and you are given 1 mark. And also, even when we're specifically told that we should not offer any new metrics, we would still get 1 mark if we say something like that. Either trademark, well, you do not need to write trademark as a superscript, and therefore I just write it like that. Either trademark is a better measurement of shareholders' wealth, please. Because by including capitalization adjustments, it motivates managers to spend money on long-term value creation activities. Okay, well, so that's how you write that, and I would suggest that you remember it. So even when you're told not to suggest anything, either trademark is the only thing that you can suggest, and only in this context. All right, so we talked about each and every metric, and in the end, we need not to forget to find the metric that was not the part of the mission that was not covered. And for us, it's to provide world-class services. And we say that it seems that none of the metric measures whether the company provides world-class services. And also, it is very important to understand that even if your metrics do not fit entirely to the mission statement, you need to stretch them by using the word indirectly measures and try explain well how, because you will not get marks for just stating this is not measured, this is not measured, this is not measured. It will just not bring you any marks. So you can talk about 1 point maximum, 1 mission part maximum that is not measured by any metric. So, for example, if I had some other part of the mission statement which were not measured, like, for example, employees that are well, entrepreneurial culture of employees, or, for example, environmental friendly business, and so on, then I would say that, okay, I cannot say that this is not measured and this is not measured. And then I would need to stretch any of the metrics to the world-class services part of the mission. Then I would say, well, maybe organic revenue shows us whether the customers like this company, and therefore it indirectly measures that the company provides world-class services. But also it might be the case that the revenue increased only because the company was providing discounts. Okay, so I'm going to delete that, and this is how the first part looks like. And if we talk about marks, then, well, let us see, we have 8 marks here. And let me see how much points we've made. So we have a mission breakdown, so it would be 1 or 2 marks. And then we have 1, 2, 3, 4, 5, 6 metrics, and the 7th paragraph saying that there is no measure for world-class services. So this means that this is more than enough for this part of the question. And please, well, make sure that you understand how this part is answered, because it is tested quite often.